Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So that's a picture of the dollar pulling into the support in October of last year. But remember, when it pulled into that support in October, it made a new low in November, and it wasn't until December that we rallied from that area and started our uptrend. So it was a cyclical bull market rally, the second one in the secular bear market rally that we've had from the dollar since 2000. And I'm here in Dubai, and a year ago, November, they announced that Dubai World was possibly going to default on $24 billion worth of debt, followed by Fitch downgrading Greece, followed by Ireland's banking system, and Portugal and Spain all saying that they're having problems paying their bills, and that's what kicked off the dollar rally last year. Now, I don't have a crystal ball, but any of those things, we've had a flash crash, which has pretty much shaken the confidence of anybody that's been an investor. Our unemployment rate is still remaining very high. And we had economic data that over the summer came out pointing to slower growth than forecasted. So everyone's saying that there's a chance for a double-dip recession in the U.S. A double-dip recession is fear. Fear means a rally in the dollar. And we are right there on this chart, down at the origin of the rally from last year. As a matter of fact, just a little bit above it. So there's a potential from here. Now, it doesn't mean we can't make new lows in the dollar, and we've been making new lows against some of the currencies, but we could rally from here. So if you're bearish, just be bearish with a tight stop loss, probably above the previous week's high or the previous month's high. And there's our VIX hanging above that 19 area where there's some pretty strong support in the VIX, super rally from April of this year. So we're hanging out there, and definitely there is some complacency in the market. But here we have earnings season coming out. We have a lot of catalysts that could really drive fear into the market again. And just in the last day, we had about a 2-cent sell-off in the euro versus the dollar. So there definitely is some sellers up in this area. British pound broke out of a trading range and broke out to the upside, extended the top of the trading range, wasn't sure which way it was going to go. It's bullish. It's testing a support. It's testing a moving average at this point. It breaks out when the dollar rallied, and it wasn't one of the stronger currencies, but the dollar against the British pound really, compared to some of these other currencies, has hardly retraced anything. So we're pretty close to the 60 level right now, which means that the dollar is still holding its own against the British pound. And the British pound is actually coming up into some pretty decent resistance in the 170 area in the spot market. So I would go back to being neutral, especially if we could get a pullback closer to the 62-60 area, and possibly look for a trading range situation between 62, 60, and maybe closer to the 68 area for now. All right, so Canada's dollar, of course. Now Canada's dollar, Australia's dollar, New Zealand's dollar, and the British real, we call them commodity currencies, and they're not part of the dollar index. So the Canadian dollar is, the rest of them aren't. So that means that they're moving pretty much on their own. And since their currencies are tied to the value of hard assets like copper, lumber, oil, gold, they move in pretty much a different direction than the rest of the baskets. Like Australian dollar, very, very strong. Their economy's been strong. They've been raising interest rates, and it looks like everybody is funding their carry trades by shorting dollars, long Aussie. Okay, but in the case of the Canadian dollar, we have had sideways trading. We've had sideways trading even in the dollar versus some of the stronger pairs. We had a lot of supply to absorb before we broke above 99 recently in the Aussie dollar. So this pattern that we're looking at here is sideways in the Canada dollar last year around this time. but that's a distribution pattern. So in other words, the buy orders to hold the market up that were at that time were close to 108, we were absorbing them, and every time we rallied, we were selling off at lower and lower prices. Eventually we broke through and we continued down to the next area of support. We started another little counter trend rally from there. But once again, at that area around 103, every time there was a rally, we had sellers at lower and lower prices. That's distribution. That's institutions shorting rallies because they're anticipating lower prices. And this chart is the weekly chart from the weekend here, and there's the distribution pattern for the dollar versus the Canadian dollar. So now if it can break through the bottom of the support just below 100, based on this chart, it has the potential to fall to 95. So you've got two choices. If it happens to snap up and rally and you can get an opportunity to short up above 105 at the top of the trading range, do it. But if it happens to break through the support just below parity, it's pretty much look out below. The euro, just again, completing the entire cycle as of last year, coming all the way back down to the bottom of the chart. And a couple of headlines, not since October, we're looking for some of the predictions that the euro is still going to trade to parity. And these are as recent as May of this year. And of course, the euro has had a nice rally from the euro spot currencies had a nice rally from about 120 to 140. But yet, these people are the secular trend traders who insist that the euro will reach parity with the dollar, and they're predicting when that's going to happen. Now, I don't know about you, but I like that rally from 120 to 140. So if it does happen to drop from 140 to parity, that's an opportunity too. And if you're trading leverage products, you could be wiped out by the time that secular trend resumes. So here, we're in the dollar with finding support. And I did this webinar for you guys talking about the possibility of a new trading range. So we were going sideways into December last year. We broke out of that trading range. We ran into some nearby resistance where we kind of went sideways for a while. But if the nearby resistance gives you an opportunity to buy a pullback to rising moving averages, then you can either buy a new high or you can buy some kind of a pullback, which would be buying weakness. Okay? In a downtrend, of course, you can sell when you make a new low, or you can sell a rally. If your personality allows you to sell strength, and a lot of people don't like doing it, then you could sell rallies. But if your personality is more geared towards taking breaks of support, you can sell the new lows. In this case, you had a pullback entry to the rising moving averages after the breakout, and then you had another breakout opportunity when the dollar made a new high against the euro. So you have both, but only if at this time you become willing to see the big picture of a potential reversal for the dollar, which this is where it happened. Now you can participate in this new uptrend. And it made a brand new high. And of course, once it makes a brand new high at the end of May, it's either going to come back to earth through the bottom of that trading range or continue on higher. So now you can use your moving averages as a guide to where the bottom of your trading range may be. And I mark it off as a potential stage 3 top if I close below the weekly low. Of course, it can continue higher if it rallies through the top.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.